Alrighty guys, what is going up? I hope you guys are all having a great and an amazing day today. Now in today's episode, we're going to go ahead and look at Home Depot stock. We're going to look at everything that you guys need to, learn before investing in this stock. So I hope you guys enjoy it, and overall, I hope you guys learned something. So now let's jump into it, and if you have any questions, go ahead and ask them down below. And if you guys get any sort of education out of this, please drop a huge like on this video so more people can see it. So now let's jump into it, roll the intro, let's go. Bam. So now how this video is going to get laid out, we're going to go ahead and look at the fundamentals, and then we're going to go ahead and look at the stock chart, look at support, resistance, and where I kind of see it going in the future, and if it's a fair buy, is it overvalued. We'll talk about it all. So now one of the most important things when you guys are looking at a stock, especially right now during a time of uncertainty, the biggest thing is cash on hand. In Home Depot, they do have quite a bit of cash. So they released this April 30th of 2020. So now, not too long ago, they do have around $2.1 billion in cash. And this is an overall 19% increase, which is pretty nice to see that Home Depot is still able to go ahead and save all this cash during this time of uncertainty. And for those of you that don't know, Home Depot stores are still open, so they are still able to collect revenue during this time. So now how much revenue did Home Depot make? They did make around $28.2 billion, and this was an overall 7% increase. So honestly, during this time of uncertainty, Home Depot is still increasing their revenue and still increasing their cash on hand. So now what is their price to earnings? Is it overvalued? Well, me personally, I like to invest in stocks that are under 25 on the price to earnings. And looking at Home Depot, Home Depot's P to E ratio, which is price to earnings, is around 24.04, which is honestly pretty good. It's not overvalued and it's not significantly undervalued. It's just kind of in this perfect middle ground, and I think that's a perfect place for this stock to be. So overall, the gross profit for Home Depot for the last quarter was around $9.6 billion, and this was a still 6% increase, which is awesome. Now, when you guys are go ahead and looking at all these stocks, how much debt do they have? I don't care what stock you're looking at. Most stocks have debt. So how much debt does Home Depot have? They do have around $33.7 billion in long-term debt, which long-term debt is not too bad. Realistically, they're using that debt to build the business and overall help out their shareholders and help out their stores and stuff like that. And this was an overall 25% increase. So they are taking on a little more debt, but I feel like most companies are. So Home Depot right now is in a great spot. They do pay a dividend. So for those of you that don't know, I'm building a dividend portfolio that pays me $1,000 per month. That's my goal for all of my dividend stocks. And I do own a couple shares of Home Depot because the dividend alone is around $6 per share. So you can sit back, relax, and have that passive income stream come in. So now let's go ahead and look at the stock chart, look at support, resistance, and where I think it's going. Alrighty guys, so we have ticker symbol HD. This is Home Depot's ticker. So when you guys are looking up this stock, just type in HD and it will come up. You guys can see we have the Home Depot logo here. And right now we are on the 3-year weekly chart. So you guys can see each one of these represent 1 year. So you guys can see we do have 3 years. Now each one of these candlesticks, they do represent 1 week. The reason why I like to use this is because you get a fair representation of kind of what the stock was doing before this whole mini market crash. And as you guys can see, this stock is coming back up to highs. It has hit highs. So now let's go ahead and look at it. So do you guys see this yellow line here? This is what you call a 200 moving average line. I did have a question on how to get it. It's very simple. All you got to do is go to studies, add study, or go to edit, go and click on the moving average, and then go ahead and click this little settings here, and then make sure you're on the 200 just like that. So now you guys can just click apply and then okay, and then you guys have that line. So the reason why I like this line here is because instantaneous, you can look at this line and you can see that we do have an upward trend right now, which is nice. And anytime the stock has gotten close to it, it uses it as support, except for down here, but we did get almost immediately bought back up because this stock was significantly undervalued, and a lot of people took advantage of that. I personally missed out on the opportunity. You guys can see where I got into this stock,
but I do think that this stock is a fair buy around $230. So right now, with it being a little over 250, I do think it's not significantly overvalued. I think it's better to be in the market than out of it, and especially right now during this time of where the Federal Reserve, the last thing they want to see is the overall stock market to crash, and they are printing thousands and millions and trillions of dollars to keep the stock market and the economy afloat. So, I do think that this stock is going to be one of the stocks that definitely in the next couple of years, they do continue to grow. There's no shortage of people not doing construction, because that's mostly what Home Depot is. Home Depot's biggest competitor is Lowe's. I don't care what you guys say. It's not Ace Hardware. It's not anything like that. It's Lowe's. And the reason why I love this stock is they do pay a dividend. They have this beautiful growth. And let's go ahead and look at the all-time chart. That's another very, very important thing. And look at this beautiful growth. Anytime that once this stock broke above this line, you guys can see anytime that it got close, it got bought back up. Even down here, it had a hard time, broke below it. You know what I mean? So as you guys can see as well, they do pay a nice dividend. It is creeping up on a 58 on the RSI. It's kind of in this perfect middle ground. So right now, I do think it is a fair buy around $230. But if you are someone who is just, you want to get into it, this is going to be a stock where you can hold it for a couple of years and it's going to grow and you're going to make your money back. And honestly, it's better to be in the market than trying to time it, because you're going to lose out on a lot of profit doing that.
So that is it though. I hope you guys enjoyed the episode, and if you guys did, make sure you guys smash the like button. If you guys got any sort of value out of this video, make sure you guys subscribe to my channel. We do videos almost every single day, so I hope you guys enjoy it. Take care, guys. Have a good one.